Hello everyone and welcome to another weekly analysis for Traderbook. My name's Ramon and today we'll be going over US oil analysis as well as a little bit of US dollar index analysis. Just before we get started, I'd like to remind you that none of this is investment advice. We'll be going over everything today based off education, and it's used for educational purposes only. So please do your own due diligence when you do make your own trades. But I'll be showing you a little bit of what I've been looking at for the past months and past years, and where I think price will go based off my analysis in the coming months and coming days and weeks. So just to get straight into it, on the monthly basis, we can see here. This is the monthly time frame, and we're hitting this zone, this area that I've put here. This is our resistance zone. Now, what we've looked at before is this zone dates back all the way to 2019, as you can see here. So all the way from January 2019 up to January 2020, where we had that sell-off. We've looked at it as a very, very strong support zone. So you can see price, really bounce off and wick around these levels on the monthly time frame, and we saw a push up all the way to $66 at around, we had the push up in around April, and we had it one more time in January, in which we saw a real sell-off occur. And when I mean sell-off, this really broke down to the to lower lows of we've seen, well, we've never seen, to be fair. So we had lows to all the way minus figures, but obviously that was due to the coronavirus pandemic and the influences that came along with that. So since then we've had a very bullish market. So we've had price really push back, and from a fundamental perspective, we did see OPEC do regular monthly meetings and work together in terms of building price back up to where it should be, or where they think it should be. So it was interesting to see how that occurred. Obviously, I've been buying ever since them lows, regularly just buying as much as I could of oil. But now I've stopped. Now I've stopped buying, and that's mainly because of the fact that we have reached this zone, which was the support zone on a monthly basis, and now we have seen it become a resistance zone when we did have that crash. So it'd be very interesting to see what price will do in this area, that $50 to $54 area. I think that we may see some really strong resistance in this area now. We do have a 50 MA on the monthly here that is showing us some sort of border that we need to cross in order for us to really push higher than $54. So on the monthly, we do have that MA. We do have this zone here that we've made our support / resistance zone. So there's a lot of confluence on why I believe on a monthly time frame we should see price really start to turn. If you look back at that $54 mark that I'd highlighted in yellow, this is some of our lows and highs. You can see how strong resistance and support has been on this level in the past years. So if we date back all the way, to 2009, 2015, 2017, now we've got 2019, and now we're in 2021, and we're veering right into that zone here. So it will be very interesting to see what we get with this. We will need further confluences, which I'll show you in a second, and yeah, we'll see how things progress entirely. You can see over here I've made a little trend line on the monthly as well. This trend line's been a very heavy focus for me, especially since the last coronavirus induced sell-off. What we really want to see is confluences building in our favor in terms of a sell-off again happening. Will it be as bad as the one during the last pandemic? I don't think it will, but we will see a very large sell-off. I think from my perspective, I see $40 being the next mark. So we are really looking at somewhere to sell, but again, buy areas as well. So buying off $40 is something that I'm really looking at more so. So we really want to see more confluence in this area. So we'll go over to the weekly. Now on the weekly, what we see here is the 200 MA. So when situations like this occur, when there's so much confluence on the monthly and the weekly in terms of the moving averages, I tend to keep a very close eye on what's going to happen in the coming days and weeks. I don't like to get in too early because, you know, price could just keep going the way it's going, which is quite bullish, even though we've got an overall bearish market on the monthly and weekly. You don't want to be caught in a bad trade. So the best thing to do is just wait it out and see a lot more confirmation in terms of price action, and then maybe take a trade based off that. But for now, I'm just highlighting the key areas that we're going to be looking at in the coming weeks, and we can really go from there. So as you can tell on the weekly, we do have this strong EMA here. The 200 MA was pretty, you know, it's been quite consistently used in terms of the overextension. So you can see over here that large gap between the two MAs. We really want to see price pull back to meet the other MA, and really take off from there, because I do believe that we will eventually come out of this trend line and break it and push to higher levels of oil in terms of price. So we will see what will happen here in the coming weeks. I think it will be very interesting to see if we do break this MA here on the weekly and maybe meet the trend line again before we can take a real sell off, or we can just see, you know, a situation where price just kind of capitulates around here. It just stays around that $50 mark for a while, until eventually when it meets the trend line here, as well as our little support and resistance zone, and when we can get a push back down, which, to be honest with you, is the most likely scenario in my opinion. I feel like $50 mark to 54 is a very fair valuation of the price of oil now. Obviously we have renewable energy coming into play, so we will want to price that into our analysis. And obviously with Joe Biden's victory, he's more, you know, favorable to that renewable energy market than crude oil. So yeah, it would be interesting to see what happens in the coming weeks on the weekly time frame. If we pop over to the daily, now on the daily, we've got a real situation of an overextension above the EMAs. Now, these overextensions, you know, you can say what you want about them. A lot of people believe that, you know, it is what it is. Price is going to move regardless. But if you know much about MAs, then you know that, you know, price generally retraces to the EMA. So this overextension tells me that there is a sell-off due to come, at least back to that $45 mark, 44. You got $37 as lowest here of the CMA, but you know, we're looking somewhere in between that. So, you know, $40 is a fair valuation of where I think price could really push back to before we see a swing up to them, you know, $60 plus marks if we do. So I would be really looking at that mark as a place to buy. Would I take a sell at the moment on the daily, you know, according to the daily time frame? No. It's still, again, another situation where we're going to see what price does around here. Obviously you've got this little gap order here, which price still needs to fill. So it could just gap into here, maybe hit that 54 mark, $54 mark, and then slide down. But yeah, no, definitely interesting to see what will happen here. So, you know, we've got the support and resistance zone. We've got the descending trend line. Now, this descending trend line does date back all the way to the first sell-off that we got off oil, which was in 2018 in October. Price went from $76 all the way down to $42. And then we had obviously $65 all the way down to zero minus, which was the coronavirus sell-off. So we are meeting that trend line again, which is again another confluence and an interesting factor to consider when looking at oil analysis. That will be very, you know, it will be very detailing of what will happen in the coming months, because, you know, if we do see a strong rejection of that trend line, if we see price action push back, then, you know, we may be in for another little short for a couple of months before, again, you know, pushing above that trend line mark. Over here we can see the RSI overbought on the daily. We can see almost like a double top on the RSI, a little bit of divergence going on. So we will be looking at that as well. So it does give us another indication that, you know, price is going to be looking for a reversal. Same thing on the weekly. We're quite nearing an overbought market on the RSI. This could indicate maybe another push up before we go down. But what really interests me is the monthly. So monthly, we've got this 53 close. So we've got a top here on the RSI. Again, meeting with the MA. So we will see. It will be interesting to see what happens here. If there is another situation where we can see a sell-off, it would most probably likely to be at this area here, right in the middle. So yeah, just keep an eye on everything like that. What we really want to look at the daily time frame, just for another form of confluence. What I like to do is I like to use a Fibonacci retracement. I know a lot of people don't like using them, but it's really one of my methods of calculating where we are. So if I go over here, so I usually put mine off the double bottom. So, I wouldn't put it all the way down to zero, put $6 as the bottom. And you can see over here, we've got a 78.6% retracement just off that right now. Whether I take this too serious, or take this too seriously or not, I wouldn't, put all my baskets in the Fibonacci retracement. But again, it's another confluence that we see here off that top of around $66 when we did have that coronavirus crash. So this retracement was really what a lot of people were looking for. Again, confluence with the RSI, showing that this could be like the actual top where we top off on the daily here. But we will have to see in the coming weeks. We might have an overextension over to like $56, $54 before we take that slump down. But it's interesting to see that the fib retracement has come back to all the way to 78.6. So again, if you want to buy these levels here, $42, $43, $53 is another good area to buy. So yeah, what we're really going to be focusing on in the coming weeks is that, and it'll be very interesting to see what the dollar does, because as dollar has now kind of done a U-turn. We're looking at a push up, and I mean it's overall we are looking at a sell. We are looking at a situation where the dollar has been battered in the past couple of months. We've been sell. Now we've seen some form of kind of retracement, but again, we're still in a selling market. We're still in a situation where we're going to look for sells in dollars. We haven't seen any clear sign of any different sentiment, apart from a little bit of hope from Joe Biden winning the election, but even then, not enough to really push the dollar anywhere to a significant amount. So I do feel like we'll see a weaker dollar in the coming days and weeks. So that again will give us the understanding that oil price will push up a little bit more before coming down, because they're quite negatively correlated, meaning that when the price of dollar goes up, oil usually comes down. So now that